This is Bruce Blythe with Vance Publishing, standing outside the Chicago Board of Trade on a rainy October afternoon. You may be able to hear some of the noise in the background here. That's the Occupy Chicago demonstrators across the street. They've been here for over a week now as part of these nationwide protests that have gained a lot of attention recently. Inside the building here in the ag markets, corn prices have come roaring back from that sell-off in December. The December futures trading around $6.36 a bushel. Toward the end of this week, that's up about 6% on the week and up a little over 7% from the 7-month lows we hit at the end of September. Now, USDA brought us some news earlier this week, two widely anticipated reports, one of which was on this year's U.S. crops. USDA lowered its estimate for the U.S. corn crop a little more than expected. They project a 12.4 billion bushel crop. That's down a little bit from last year. They also cut the soybean harvest estimate. They left their corn yield average estimate unchanged at 148.1 bushels an acre. That appeared to be bullish on the surface, but the same day the USDA updated its supply-demand figures as well. And in that report, they raised the global stockpile outlook for corn next year and boosted China's crop. So the net result was kind of a mixed bag. Appears to be the supply picture appears to be loosening up a little bit, but it's still historically tight, as Mike North of First Capital Ag told me earlier this week. So nothing's really changed about the longer-term supply outlook for corn. We're still running light, still below 1 billion bushels of ending stocks next year. That's a relatively snug situation. Now, corn has been bouncing back partly because the price drop spurred some renewed demand, particularly on the export side. China was reported to have bought around 1.5 million metric tons of U.S. corn in recent weeks, taking advantage of that recent price drop to lock in cheaper supplies. Richard Feltus, who's an analyst with R.J. O'Brien, here says that the Chinese are developing a pattern of buying corn on hard price dips. Suggests there's going to be underlying support in the futures market. I think some December futures are going to stay well supported above $6 until we really have a better handle on the 2011 crop. Livestock markets, also kind of a mixed picture this week. December lean hogs trading a little under 88 cents a pound. That's down 1.6% since the end of last week. It's on pace for its first weekly decline in 4 weeks. The December live cattle contract, a little under $1.23 a pound. That's up a little under 1% on the week. There was a little bit of news for the cattle industry in the USDA reports this week as well. USDA cut its estimate for 2012 US beef production by almost 5%, and they raised their estimate for slaughter steer prices to an average of $112 to $121 a hundredweight from $110 to $119 previously, kind of reflecting these tight inventories we've seen and continuing to reinforce that longer-term bullish outlook in cattle. So many people expect to see continued gains in that market. Once again, I'm Bruce Blythe with Vance Publishing outside the Chicago Board of Trade.